Hello traders and welcome back to the Forex Geek. Today we are diving into a highly effective strategy that combines two of the most reliable technical indicators in Forex trading. We're talking about the moving averages and the MACD. So this strategy is designed to help you identify strong trends and pinpoint precise entry and exit points with confidence. So whether you're looking to trade major pairs like Euro USD or GBP USD or even the GBP AUD, which I am on right now, this approach works across multiple time frames, giving you the flexibility to adapt it to your trading style. Stick around until the end of this video as we walk through this method, ensuring you have everything you need to apply it in your own trading. So without wasting any much of your time, let's get started. So I'll start with the strategy overview. The moving average and MACD strategy is a powerful trend following system that combines two of the most widely used technical indicators in Forex trading. So we're talking about the simple moving averages or the exponential moving averages and the moving average convergence divergence. So this strategy is designed to help traders identify the overall trend and confirm momentum and pinpoint precise entry and exit points. So the strategy utilizes three EMAs, the 5, 15, and 50 periods moving average, to determine the short term, the long term trend direction. And the EMA 50 acts as a guide for the overall trend, while the crossovers between EMA 5 and 15 provide signals for potential trade entries. So I'm just going to add the moving average, and I like to add three moving averages at once. So I'm going to use the moving average ribbon, which is this indicator, and it's going to help me add multiple moving averages on the chart at once. So I'm going to go to the settings. I'm going to remove one here and then make this 5, and this is 15, and this is 50. All right, so also I'm going to change the colors. This should be blue color, this should be red, and this should be orange. Okay, all right, now we have the moving averages on our chart. Let me quickly add the MACD, and we have the moving average convergence divergence on our chart also. All right, so like I said, crossovers between the 5 and the 15 EMAs, they produce signals for potential trade entries. So the MACD with its default settings, the 12, 26, and 9, is used as a momentum filter to confirm the strength of the trend before taking any position. So this strategy works particularly well on higher time frames like the 1 hour, the 4 hour, or the daily charts. So by focusing on these time frames, traders can capture larger price movements while reducing the noise often seen in lower time frames. It's especially effective for major currency pairs like the Euro USD and the GBP USD, but it can also work for other currency pairs. Like I am on the GBP AUD on the 1 hour time frame for now. So the combination of the EMAs and MACD allows you to avoid false signals by ensuring that you're trading in line with both the trend and momentum. So let's quickly look at the charts to identify trade entries using this strategy. So in a bullish setup, you want to see the EMA 5 crossing above the moving average 15, while both are above the moving average 50. So the MACD histogram, which is the green lines, the green bars here, as you can see, or the red bars. We are in a bullish setup, so the green bars, the MACD histogram should also be in positive territory, confirming upward momentum. Also, the moving averages should be above the zero line, confirming upward momentum. So this is for your confirmation. So if you're looking at this, you can see that both the 5 and the 15 moving average is above the 50-day moving average here, and we have a cross from the 5-day moving average going above the 15-day moving average right here, and both of them are above the 50-day moving average, and this corresponds with the MACD histogram going above the zero line, indicating increasing momentum, and we should be looking to take a buy position from this area, targeting key resistance levels like this one, or we could just go for a fixed risk to reward ratio of 1:2. So once you see the cross and we are above 50, and also the MACD histogram is aligning, showing increased momentum, we could just place our buy orders, and our stop loss should be below major swing lows like this immediate one here, or you could just take it all the way down for this swing low right here, and then the take profit should be at key resistance level like I discussed, key resistance levels like this one, or you could raise it higher for this one right here. Also, you could target fixed risk to reward ratio of 1:2 or 1:3 depending on your trading style. So that is it for this example. Following price, you can see we have a cross here, and this is for the bearish setup. Let me quickly talk about for the bearish setup. For bearish setups, you want to see the EMA 5 crossing below the EMA 15, while both EMAs should be below the 50-day moving average, and the MACD histogram should also be negative, confirming the downtrend. As you can see, we have a cross here with the 15-day crossing below the 5-day moving average, but, and this is a very big but, we are above the 50-day moving average, so we can't necessarily take any bearish trade, even though we have the histogram here below zero, confirming momentum. Also, we do not have the moving average of the MACD below the zero line. So there are so many factors that are not following our rules for this strategy, so we should just skip this sell trade and look for a cross when both moving averages are below the 50-day moving average. As you can see, we had a major cross here. We have the 15-day moving average going below the 5-day moving average, and this is a major confirmation for a short trade. Actually, the 5-day moving average going below the 15-day moving average instead. So now looking at this, we could just see the MACD moving averages are also below the zero line, and you have increasing have the histogram of the MACD below zero, showing increasing momentum for the bears. And also we should consider taking a sell trade, as we have that cross at the close of this candle with our stop losses above the swing high, and we could just target major support levels. Also, this is why it's good to place your stop losses above major swing highs. You can see we were not stopped out. If you try to minimize your stop loss, you can see what we had there, and so placing our stop loss above the swing high, and could also target our fixed risk to reward ratio of 1:2, and you can see that's how we had this wonderful trade. And I'm looking for more setups. You can see that we had a bullish signal here, but this bullish signal is below the 50-day moving average. Also, we have the MACD. The MACD moving averages are below the zero line, so we should be waiting for aligning confirmations from all our indicators before we take any trades. And you can see this wonderful setup here where we have the cross, the 5-day moving average crossing below the 15-day moving average, and this is below the overall 50-day moving average, showing us the entire trend. And you can see here also that we have this bearish, we have increasing histogram on the MACD to the downside, of course, and also the moving averages are below zero. So all our indicators are aligning. So this means we should place our short trades at the close of this candle. You can also see candlestick patterns confirming our trade. This is a bearish move, a bearish engulfing candlestick pattern. So we could just look to place our short trades at the close of this candle, and stop loss above major swing highs, of course, and I'll take profits at fixed risk to reward ratio of 1:2. That's how we're able to take this short trade. So looking at this, there are also so many examples which you can use to trade the moving average and MACD strategy. We have several signals going on here, but none is of our interest because it does not align with the MACD and also the 50-day moving average. So we finally had the cross above the 50-day moving average, so we are looking for buy trades. Also, you have the MACD moving averages above the zero line, so we are just looking for buy trades. And you can see this cross here. You can see the cross, the 5-day moving average crossing above the 15-period moving average, and both of them are above the 50-day moving average, so we're just looking to take a buy trade. Also, wait, we have this histograms are still in red, so we should be waiting for them to switch to green histogram bars before we're looking to take any buy trades. And you can see increasing histogram bars to the positive side, so we should be looking for a buy as soon as that started happening, and our stop loss below swing lows like this one. And we're looking to target 1:2 risk to reward ratio, and this was a wonderful trade. And this is how you can use the moving average and MACD indicators to trade the market. So right, traders, we've come to the end of today's video. If you found this video helpful, please don't forget to like, subscribe, and hit the bell icon so you never miss an update. Thanks for watching, and I'll see you in the next video.